Okay, folks, welcome to Thursday Night Stock Charts Live. Welcome. I hope everybody had a great Christmas. I did. It was really, really fun. And I'm looking forward to a great 2020. So, we're going to go over tonight the weekly charts as we normally do to visualize how we might be closing out the week. How are we doing thus far this week? And the value of identifying how we appear poised to close out the week using weekly charts allows us to identify how we might be trading into the following week. So what we're doing is we're establishing our strategy. Now we still have one trading day left to go. A lot can happen. So this is just a cursory view, a preliminary view of how we're closing out the week with members on Saturday. I'll be sending out the week ahead commentary, which is where we review the close of the week. How did the week close? Did we close at the highs of the week? Did we sell off the highs of the week? Are we setting up for a continuation move higher the following week? This is all the analysis that begins effective Thursday nights into the weekend so that we're ready Monday morning, that opening bell. Also, we have some conversation to be had with regard to the price action. Colton, hey, good to see you. How you doing, Colton? We're also going to be talking about the yearly breakout of gold, a mega breakout so far in 2019. It's huge. We're going to talk about that. We'll talk about our gold mining trade and why you should not be buying the gold miners right now. Yes, I just said it. I'm going to go to that chart in a moment. I know it's shocking. I'm actually shorting the gold miners. I know, you're going to love that. That conversation is going to be dynamite. How is he shorting the gold miners after he's been pounding the table for 4 years on the gold mining stocks, and now he's shorting them as they begin to break out? We'll talk about it. Stick around. I'll take some members' stock chart requests tonight as well. I'm not going to do a members group inner circle tonight because my voice is going. I'm barely holding on as it is right now. I did a lot of yelling and screaming yesterday. It was a good time. And Christmas Eve, I had 30 people at the house over the week, over Christmas Eve. So if my voice cracks, just please excuse me. I apologize, and we'll work through it. And if you could, folks, please hit that like button. I'd really appreciate it. Thanks for that one like already. It really helps me out with the YouTube algorithm. And RL, hey brother, welcome. The pass was snowed in today, so I'm home. Cole, where are you at again? Where do you live again? And do you have any symbols for me? RL, you too? You liked it already. You're always good like that. All right, let's get to it. I'll wait till we get some more viewers in here before we start talking about the price of gold and silver. So we'll begin with a conversation with regard to Apple Valley, California. You got it, RL. That's up north, I guess? It sounds like it's up north. Okay. We'll begin with the weekly charts, and we'll do this, go full screen. There we go, that's better. Let's kick things off with, oh, really? So Southern California, you got snow because you're up in the mountains. Wow, cool. I'd never heard of Apple Valley, California. Learn a new thing every day. Interesting. I'm going to look it up on Google Maps later. Okay, so I want to talk about the future. As I look at these charts, I'm not thinking necessarily about next week per se. I'm thinking about next year. And as we take a look at the chart of the TLT, this is the iShares 20-year bond fund. We know that the Federal Reserve is in the markets. In all probability, is that a fact? Where Roger lived there? Cool. We know that the Federal Reserve is in all probability going to increase their bond buying longer dated maturities, 5-year, 10-year, 30-year bonds, forcing yields lower. And in fact, I mentioned last week, as yields were breaking out, I said they're not going to keep this. They're not going to let this happen. They can't afford to let yields continue higher. And I'll bring up that chart in a moment. Before I go to that chart, we'll talk about the TLT and the price action here. You can see that while we're still in a consolidation range here, we are currently on the week poised to close out the week with one trading day left to go. A lot can happen. One trading day left to go. We do have a bullish key reversal on the week. Nice stuff. Good for bonds, bad for yields. Good for gold, good for silver if yields pull back. Now, moving on to the 10-year yield. Hopefully it's updated by now. Sometimes there's a delay with stockcharts.com. 26. No, this is it. We are at current, down on the week. We did put in a continuation move higher, and we were rejected. So let's watch and see how we close out the week. Now, the intraday charts of bond prices are looking good. They're looking bullish. So I think that we'll probably see a continuation pullback on yields. And again, that's good for gold, silver, bad for the dollar, and that's good for gold as well. So we continue on. The tips. I love this chart. Now, I say this all the time, but it bears repeating constantly. We are being lied to. And I don't have a degree in economics, an MBA in this, that, a doctorate in the other thing. I don't need one. Right? I'm a PA, a self educated honorary degree in technical analysis. I'm looking at this chart, and I hear the Federal Reserve in this ear saying that there is no inflation. I hear the government this year saying, wow, the Federal Reserve says no inflation, go buy stocks. And I take a look at a chart and I use my eyes and I say, I don't know what they don't see, but what the institutions are saying, because they're the ones that buy tips, Treasury inflation protected securities are breaking out. We have broken out. We broke out the week of November the 18th. We've been consolidating. We are looking to break out and probably close at the highs of the year. What don't they get, and how dumb do they think that we are? Monthly chart. Here you have the tips. Wedge formation so far this month, December 2019. It is breaking out. Earlier in 2019, August, we broke out to all-time highs on the tips. Yet, the Federal Reserve says there is no inflation. Great. Then the tips should be tanking right now. Yet, they're at all-time highs. Go figure. So who's right? Who are we going to believe? Institutions putting their money to work and the markets, or are we going to believe the Federal Reserve? I'll leave that question to you to answer. I've already answered it and put my money to work, betting that they are wrong. Hey, Tom. Okay, Stokes up here, ready to hook up here. The dollar, weekly chart, a complete rejection, a new weekly high, very similar to the 10-year yield, right? The 10-year yield was rejected this week after putting in a new weekly high. What happened with the dollar? Rejected. Weak and getting weaker on the Stokes. We identified this downtrend weeks ago. We're threatening to break it down on RSI. So the dollar not looking good going into the new year. The VIX. All right, so they keep limping stocks off of, this is a daily chart. They keep limping stocks off of the lows of the session, new daily high sequentially. Yet, look at this. The VIX on a weekly basis is up. What else is up? The S&P 500. They trade in an inverse direction. Yet they are trading in tandem of late. So what institutions are doing now, they'll bid up stocks. They'll take the ride higher. But at the same time, they're buying insurance because they know the end is near. So at some point in time in the very near future, we're going to get a break in this market. And we're looking at, I was looking at this evening, SQQQ, because the triple Qs have gone nuts. I'm looking at the SQQQ on a daily chart. Take a look at this. We have RSI at 20.45. It appears as though we're going to go lower here, so we're not ready quite yet. The trip Qs. Look at this. It's insanity. We have the triple Qs at RSI 80.78. And don't get me wrong here, folks. I'm predicting a sell-off in this market into the new year. I'm not predicting a crash yet. I still think that we're going to see a rally into the elections. That doesn't mean it's going to be a straight shot higher. This is unsustainable. It's going to have to pull back. So I believe we're going to get a correction early on in 2020. They'll rally it back as we proceed into election season. The Dow Transports weekly chart. Now here's a reason why you need to stay somewhat bullish on the markets. We broke out this week. One could argue that we broke out last week and this week is a continuation move higher. We'll stay conservative. We'll just say we broke out this week. Nice bullish reversal bar. We're at the highs of the week. The transports looking very good. The Dow Jones at the highs of the week. The Russell 2000 very close to new all-time highs. Inching up there. We recaptured 165. Let's see whether or not we close out the week above that level. The banks. The banks are eerily strong. And I say that because when yields pull back, the banks tend to pull back. Yields are pulling back, yet the banks are at the highs of the week. Daily chart. Look at this. Nice consolidation. No breakout yet. But in all probability, we're breaking out in the banks as soon as tomorrow. Higher lows on RSI. Horrible volume today. It's going to be the same tomorrow. This is what happens when the computers are keeping the market in check. Don't forget, all the Wall Street big shots, they took their Learjets out to Aspen. They're skiing right now. They don't want to be bothered with a market crash. The computers are programmed to keep this market in check. Oxy? Sure. Tom, Boeing is frightening. How is the new CEO going to salvage this mess? Yeah. He's got a honeymoon period. He's going to have to do a lot of cutting now, right now. Emerging markets. At the highs of the week, very strong. Dollars weak. Emerging markets are going to be strong in a weak dollar environment. Energy, weekly chart. At the highs of the week, a bit extended. Leading into the 2 standard deviation Bollinger Band. We still have some room in the tank here to go up higher. As long as oil hangs in there. Here's oil weekly basis. Oil is pressing higher. And as I talk about these commodity charts, folks, remember when I started off with talking about the tips, talking about inflation. This is all inflationary. The Federal Reserve doesn't believe it to be. Shh. It's not inflationary in the Fed's book. They back out food and energy. Don't pay attention to that. But it's going up higher. Heating oil. This is one I keep pounding the table on. If I could type it in properly. There we go. Navy. Here we go. Go to a monthly chart, home heating oil. Right at the highs of the month. Very close to a breakout, home heating oil. Higher lows on Stokes. Breakout on RSI. What's not to like here? Unless, of course, you're a consumer. All right, so now we're going to talk a bit about gold. All right, so I've been bullish on gold since I don't know, October, November of 2015, right before they started raising rates. And we got long of Nugget at the time. I've been trading in and out of Nugget ever since then. We enjoyed the nice rally up to 145 and change back in 2015 into 2016. And it's obviously since pulled back from those levels. But gold, it should be noted before we talk about the price of gold. You'll hear all sorts of people come on CNBC and they will naysay gold all day long. Why? It's because they don't own it. They want you to own stocks. They're fund managers. If they were a gold fund manager, they would be talking of gold. Unfortunately, you don't see many gold fund managers on CNBC, on Bloomberg. You get hedge fund managers. You get fund managers, institutional money investors. They own stocks. They want stocks to go higher because we're in a low interest rate environment. It's the easy trade. That will probably get worse, meaning the debt crisis that we have here right now. And as we proceed into a stagflationary environment, meaning where economic growth is anemic, maybe one quarter up, maybe one quarter contracting, maybe net at the end of the year you eke out a small gain, yet inflation is creeping up with GDP flat. That's stagflation, last seen during the Jimmy Carter days. So you may hear a lot about the Federal Reserve wanting inflation. Trust me when I tell you, the last thing the Federal Reserve wants is inflation, because they only have one trick in their toolbox to fight inflation. That would be to raise rates a la Paul Volcker, 1979 to 1982, which put us into recession. At that point in time, we were a net exporter of goods. We were a creditor nation. Fast forward to today, we are a debtor nation. We can no longer afford to raise rates up to 20% at their peak. If we had to raise them up to 5% at current, the interest alone on our debt payments every single year would be the equivalent to the defense budget at $700 billion. So the Federal Reserve does not want inflation. They say they do, but they don't, because they'd have to fight it at some point in time, and to fight it would bankrupt the, well, we're already bankrupt. It's to realize the bankruptcy. Now let's talk about gold and why we need to be long of gold, and why I've been saying this for years now, is that at some point in time, investors are going to find their way into gold, and gold price in US dollars is not at all-time highs. And you'll have people come on TV and say, you know what, gold, it's lagging. It hasn't never returned to its 2011 peak. But if you price it out in Canadian dollar terms, Aussie terms, pound terms, I believe, definitely in euro terms, gold is at all-time highs, surpassing the highs last seen back. Bad chart for the highs. Go to a quarterly chart. Back here in July of 2011. That's the prior peak. But you can see that we are building a huge base. We are putting in higher lows and higher highs. Now, the chart I wanted to talk about was this chart here. The gold yearly chart. So you can see here that we have been in, ever since the highs back in 2011, we have been putting in a consolidation. We broke out technically in 2018. The significant part about 2019 is that we had a continuation breakout on the year. We are poised to potentially close at or just off of the highs of the year. All I care about is that we close above 1500. We closed out the day at 1540 spot 40. So there's a few trading days left to go. On a daily basis, gold, the miners, silver, they're overbought. We may get a pullback here. I may not get what I want. Daily chart. We closed out the day today, and this is why I was shorting gold. Actually, the gold miners, sorry. Shorting the gold miners. I didn't sell any of my NUGT position. I hedged it. So we closed out the day, again, 1514 spot 40. However, we're kissing the third standard deviation Bollinger Band. Does that mean it can't go higher? Sure, it can go higher. But it's going to correct pretty soon. And we'll probably pull back down and retest the 1500 mark. Now, taking a look at NUGT, of which we are looking to buy more of. So while, yes, I am hedging it right now, we are looking to buy more very soon. Daily chart. Now you can see the past 3 trading days, we've rallied up. I think it's over 24% on the week. What is it? Yeah, 24.17% on the week so far. I see comments coming in. I'm definitely going to read them in a minute, and I will address them. Hey, Richard, good to see you. All right, so the reason why I'm concerned about NUGT right now, again, as members know, I get very concerned when we have the third standard deviation Bollinger Band being kissed, made love to. In short, folks, if you're not familiar with the third standard deviation Bollinger Band, we're not supposed to be there. That doesn't mean I can't be embarrassed tomorrow morning by seeing a rip higher. I'm not going to be embarrassed. I'm long. However, I'm hedged, and I'll add to that hedge on any strength, expecting a pullback to several support levels that we're watching. The first one is 3250. The next one is 30. The final one, which may ultimately coincide with 30 or 3250, is the rising 20-period moving average, which is at current about $28 and change. That's rising rapidly now, though. So we'll be looking to add more here. We're going to scalp profits on our, we bought Dust, DUST. You can see here, it's a very speculative play, but we are kissing the third standard deviation Bollinger Band. I'm not expecting Dust to go rallying up and past $8.54 up to that level. All I'm expecting is a brief counter trend rally. That'll take some of the froth off of NUGT, allow it to pull back to our support level. Watch for a consolidation on a 2 and 4 hour chart. Then the minute that we see a breakout out of that 2 and 4 hour chart, then we cover the Dust position, meaning cover the short position, sell the Dust position, book profits, make them real. Then we go adding more to the NUGT trade. That's the strategy at current. Recently, I was asked this question today, and it's a fair question. I've been selling a lot of covered calls on NUGT. And the question I was asked is, why didn't I sell covered calls? That's a good question. I would have, and I still may. Had we rallied up and through 35 to 35.50 per share, where we have a lot of overhead supply here, I would have sold the weekly call options, expecting a pullback, and those options would probably expire worthless. So that's still in our bag of tricks that we could pull out and still leverage, but a little bit too soon. I would have liked to have seen it hit 35 at a minimum. We may not get there. Maybe we will get there for all I know. We just don't know. We'll see tomorrow morning. But if I do execute that trade, an alert will go out to members. Thank you, sir. Okay, let's go to the comments. Tom, I'm interested in URA. That's uranium, right, Tom? ITB, if memory serves me, those are the home builders. Is that good price? I think I got it around there too. Okay, my memory's not going in my old age. Whatever. Hey, can we check out OXY? Sure, we could do that. What else do we have? Colton with Dale Evans. On Trend Spider, NUGT crossed a resistance line. Yeah, I know that resistance line. I saw that. I think that's... No, you're right. We'll bring it up. I know exactly what you're talking about. Let's go to... Let's bring up Trend Spider. All right, we'll go to NUGT. Okay, so this is probably the one. Let's take the monthly off here. Clean this up a bit. I think you're talking about this resistance level here, right, Colton? Thank you, Rob. Mila, hey, how you doing, brother? Rich, hey, Bob, just logged in. Please cover SPY IWM. You got it. Okay. Thanks for those comments, everyone. I really appreciate it. And folks, for those who are just joining, if I can ask you to please, if you can hit that like button, I'd really appreciate it. Thank you very much. It helps me out with YouTube. All right, so getting back to Colton here. Okay. But yeah, that's a resistance level. I was actually looking for that, not to hold today. I was expecting to pull back and a close down below it. And I probably would have been a little bit more aggressive with building a position in DUST had it done that, but it didn't. So what we may do here is pull back, dance around here, and that may hold, and then we may see this act as a launching pad. Ideally, believe it or not, I'm going to say this, ideally we break. I'd like to see us pull back, retest 32.50, 32, perhaps even 30, consolidate, and then break out higher. That would be a good risk-reward entry point for me on NUGT. Let's do some symbols. Richard. All right, so spiders and IWM, we kind of already covered, but we'll do it again. All right, so as we go over these charts, let's keep in mind what's going on. The computers are in control, as noted by this volume. This is probably the lightest volume that we've seen all year long. And in fact, it is. Today's volume was the lightest volume in the entire year. Yet, we flashed a bullish key reversal bar. So, do I think that we're going higher here? In all probability, yeah. Would I be surprised if we broke tomorrow? No. But when you take a look at a 4-hour chart, look at this close. We saw a little bit of topping action in the morning, but the close was fairly bullish. We closed at the high of the bar. So they can keep limping this up on very, very light volume. And we are looking to short. Take note of lower highs on ADX green, higher lows in red. So the end is coming. Let's pull up. I should say the correction is coming, not the end, because I do believe we're going to rally into election season, absent a geopolitical event. Let's go to a weekly chart. We do have some resistance back here. But again, I'm agnostic about the markets right now. I think that we're just going to limp up higher. So far in the month, we're poised to close at the highs of the month. We're above one resistance level. We have another one right here at 168.44. In that neighborhood, 169.49 is better. So I think that we could still go higher here into the new year. The spiders. You know, what's not to like here? You know, if you ignored the fact that it's silly season, meaning you have no volume, the computers are in check, it's Christmas season. You take a look at this chart. Let's get rid of this. And you can see that we broke out in November on a monthly basis, pulled back, retested. We're currently at the highs of the month. What's not to like? Weekly chart. And by me talking bullish right now, I would not go buying stocks at all right now. I have one micro cap. That's it. One. Second Sight Medical Products. That's because I like the company. Weekly view, we're at the highs of the week, becoming more and more extended. Daily view, closed at the highs of the day, broke out today. RSI, elevated, but still at 77.34. You take up the chip Qs, and the chip Qs have RSI at 80.35. So obviously the S&P 500 is a bigger and broader index and much harder to get above the 80 level than what is the triple Qs, but I think that we can press higher. So would I go shorting today, right now? Probably not. I look for a break on a 4-hour chart, rally back, lower high, and then go shorting into that lower high or potential lower high, and then add aggressively on a continuation breakdown to new lower lows. Once I see this trend, let's go to a 4-hour chart. Where's my drawing tool? Once I see this begin to break down below this lower band of support, we may pull all the way back down here to 210.75 thereabouts, rally back, we put in a lower high, and then we break down below this key support level, then it's time to go shorting the market. But right now, you could short it, but stay small. You know, the markets could stay irrational far longer than you could stay solid. What else do we have up here? Nothing. Merry Christmas, Happy New Year to you, pal. It's been a while. Ruby. Let's bring it up. That's Rubicon? Yeah, right. Mila, yeah, we've been buying dust as a hedge. All right, so RUBI weekly chart broke out last week. A continuation move higher this week, but we're off the highs of the week, flashing a doji formation. I think it's susceptible. I don't know what it is tonight. It is susceptible to a pullback and a retest here. And keep in mind that you have overhead supply right here, 8.88. Watch for a retest here, unless of course we rally up and through this resistance level and close there on a weekly basis. Daily chart. Here's your breakout on the 20th. Consolidation. Today we flashed a bearish key reversal bar. I think the best bet, if you're looking to enter this trade or add to it, wait for the pullback to the support level here at around $8 a share. That would be a very interesting support level, because what you could do is enter at that support level, then you put your stop right below it, because if we break that support level, you don't want to be involved with it. So very little risk, lots of upside potential for the shares. So I think it's a good stock. But ideally, we either A, pull back, do a retest, and or B, rally up and through resistance at 8.88. Then you could look to add or open a position. But I wouldn't buy it until we get one or both of those situations. What else do we have? Oh, you're already in. Okay, good. So you're up. So you're in a good place. Okay. So just watch the support level here, though, at around 8.14 per share. If we break that and close down below that, you may just want to think of pulling the plug and exiting. What else do we have here? Let me go back a bit. URA. This is uranium. So let's go to a monthly chart. I like it. We'll discuss it a little bit further in a moment. Wow. Look at these Bollinger Bands. Growing ever so tight. Very nice. So what we're looking for here is a monthly breakout. We'll keep this active for, I may enter this one. Take note of your RSI rising, Stokes rising. There you go, Tom. Weekly chart. So here's that alert that I created. This is monthly resistance. So I couldn't go buying these shares yet. We're in ever tightening wedge formation, but I really like the RSI. Nice cup action. I wouldn't call this a cup with handle formation. You don't have that downward sloping handle yet. but we are very close to a breakout here on RSI. It may break out, in fact, prior to price breaking out. So I like it. I need to see a breakout above this upper band of resistance. May not be on a monthly basis, could be on a weekly basis, all the same. So I like the setup here, Tom. ITB. All right, so obviously a sector that is influenced by yields, and we are at resistance levels last seen back in July of 17. So I would not be a proponent of buying these shares. You can see it's balking at that high. So what I would do here, let's throw up some overlays, see how interesting this gets. Wow, we broke down here, Tom. We were above. Here was your breakout. We broke out in October above resistance, consolidated. We have now failed. We've broken down below not one support level, but two. Stokes rolling over, putting in lower highs and lower lows. Let's throw up some monthly overlays here. For those not familiar with TrendSpider, you have the ability to use multi-time frame analysis, meaning on a weekly chart you can overlay monthly support and resistance levels, and that's what I've done here. So this rising upper band of support, the lower band, coincides with the rising 20-period moving average, which is kind of blocked right now, but you can see it back here. If we fail to hold that, I think what happens next is that we come down here to support at 41.97. If that fails, we're coming down to these monthly support levels here. So if you're going to buy it as on spec, wait for it to hit support at around 44.09. Keep a tight stop right below that level, because if it fails, you may see it limp back up in an effort to try to recapture it. You know, it's a gamble that it will. It probably won't. And you'll see it break down even further. So me, I don't like the trade. I would avoid it. And if you think about it, yields are pulling back, yet home builders, they can't catch a bid. Something's up there. Your 50 period, actually this is a 20 period, is flirting with the 200 period moving average. I'm sorry, the red, I'm used to stockcharts.com. The red on TrendSpider is the 50-day moving average. I need to change that. So this is a 20 flirting with the 50-day moving average. Not where you want to see moving averages going like this when you're looking to open up a long trade. Okay. All right. Let me see if I missed anybody here. AMD, you got it, Rob. Okay. So AMD has come a long way. A very pretty chart. Let's overlay some Nothing happening there. We're at all-time highs, very close to it. Weekly chart. We're slightly off the highs of the week, but I don't see an entry point opportunity on a weekly basis, daily basis. We're stalling out here a little bit. I mean, it's had a great run. Would I be a buyer here? No, I couldn't go buying the shares right now. Were I long, I would be looking to raise stops, and I would raise my stops because we broke out above this upper band of resistance here in green at 45.91. We did a retest of that support level today, and it held. So were I long of these shares, I'd be raising stops pretty dramatically, especially with this market weakening up here in terms of volume to the upside, not so much in terms of price. Let's bring up the SMH. Beautiful chart. So there's probably more fuel in the tank here for the semis. Actually, the semiconductor index did not put in a new weekly high this week. It stalled out a little bit. I couldn't go buying these. Looks like we broke out today on a daily basis. Very close to it. Yeah, we broke out today. So, in all probability, the sector is going to move up higher, back to AMD. If you're going to buy them, not my favorite trade, just use a stop right below the day's lows. We appear poised to close back down below the support level. You got to get out. But as it stands from a bull case, the higher level view, monthly chart, weekly chart, all breaking out to new all-time highs. We broke out to new all-time highs today. We were rejected. We did a retest of the breakout point. It held. If we begin to break out yet again, you could buy. Just keep that stop right below the day's lows and keep lifting it up. Because once this market goes, it's going to get ugly real fast. This is the old saying, the markets take the escalator up, but the elevator down. So keep that in mind, please. What else do we have out there? As a matter of fact, for Rob, since he was a kind gentleman, I'll go to a 4-hour chart of AMD. All right, so we have some resistance above here on AMD. So just be careful here. Here's that breakout point. Using a 4-hour chart, using the breakout chart, using a daily overlay on a 4-hour chart. We have broken out, consolidating. Again, if you're going to buy it, use a stop right below the day's lows on a closing basis. So we'll probably eke out more gains here. It's just not for me. Too much risk, not enough reward. What else do we have here? Courier 21, Yeti. That's why I have to do the members group inner circle, because you guys are having me doing symbols all night long. I love to do it, but I'm going to have to cut it short soon because my voice is going. Okay. This is a 4-hour chart. Let's pull back here. I got to get a feel for the higher level view. Oof. You guys with these new issues. Monthly chart does not help. Not much movement. I mean, since for the entire year, it's just traded sideways. Good trading stock for the year. All right. So it looks as though these shares are close to a breakout. Let's throw some overlays up here before I start drawing. Where are my overlays? There we go. Okay, so I always get asked this after I do commentaries. If you want TrendSpider, there's a link below in the description area. Use that link. Use CT25Z as your discount code. That's a 25% off discount of TrendSpider, and it's free with my silver and gold level memberships. That being said, I move on. All right, so we broke out last week on YETI. Nice. We were in a long-term triangle formation. Very nice. Any idea what the short interest is on Yeti? I think we're getting ready to break out here. We'll keep this active for a few days. All right, so once we see a rally up and through and a close above this resistance level, it's going to be off to the races. This upper band of resistance here in red will act as resistance. So that's the first price target. So I like the setup here. Now, if we get a pullback to this lower band of support at around 32.92, that would be a good entry point. Just use a stop right below that level. 4-hour chart. Very tight consolidation here. Again, using that same alert, a close above this resistance level would have as long of YETI. Nice chart. What else do? Okay. Thanks, Rob. Appreciate that. Is the members circle available at the silver level membership, Bob? It's available to all memberships, all levels of memberships. The reason why I do that is because I like the engagement, and a price for engagement should not be an obstacle to joining. So I think that it's invaluable. The difference really is that with the silver and really the gold level membership, you get access to me constantly, meaning I go over the charts for you every single day. Whereas I'll review your symbols twice a week on the in the inner circle. So it's not you don't get that immediacy, and that's the big difference. That's what the gold members like. And plus, of course, you get TrendSpider and a lot of other add-ons. You're welcome, Curio 21. CERS. Oh, okay. Hold on. Mila asked for what is it? NIMH? NIMH. Can you confirm that, please? NIMH? NI? Oh, that's what I did wrong. Backwards. Sorry, you're good. Or not. That is not popping up on my screen. Let me try it again. I'm going to paste it in there. I'm not getting the symbol found for that. Let's try... yeah, you may want to check that symbol. That's not coming up. Oh, I see you corrected it. Sorry about that. I didn't see that note. All right, so I'm going to do a test, Mila. What do you want to do? You want to buy it? You want to sell it? What do you want to do? Thanks, guys. I feel like I'm 100 years old right now. What's the game plan? Looking to go long? Okay. I think that that pony's left the station for a while, Mila. You don't want to. All right, so we the real story here is on the daily chart, not so much on the weekly chart, but we'll talk about it. So this was looking really good, right? Nice tight consolidation. We broke out the week of the 16th. What do we do this week? We failed. We failed to hold it. Never ever good. Lower high in RSI, Stokes are rolling over. A breakdown on Stoke RSI. This all assumes that we closed down where we closed today, or closed out. We close out the week where we close today on Friday or lower. Okay? Maybe we'll rally back. Maybe we'll turn positive on the week in one day. Maybe. You know, we keep an open mind here. But it doesn't seem probable. Daily chart. Now, here's that breakout. And this is actually what I teach members all the time, is that when you get a breakout, and I was talking about this earlier with NUGT, right? You get a rally up and into that third standard deviation Bollinger Band, you don't want to stick around. And then you flash a hollow filled candlestick, that's a sign of indecision, right? Not enough buyers to keep this party going. And what happened? Bearish key reversal the following day, a breakdown the day after that, continuation move lower today. In all probability, what happens when you have a breakout point failure, meaning you break out of resistance right here, 34.56. Then you break down. Normally what you'll do is you'll retrace all the way back down to the lows of the trading range. And there's a good chance you break that support level. So my price target at current is at $32.50 per share. And the question is, does it hold? So if you're looking to buy this on spec, I wouldn't buy it until we hit $32.50. And I'm really not going to buy it because you're going to have your Stokes down below the 50 mark, losing momentum. I would avoid these shares. I would avoid them. Too much going on here, and it's not positive. So I would avoid. Volume bars, big volume. Big volume. I would avoid this one, Mila. Too many other fish out there in the sea, you know? What else do we have? I'm going to leave off with CERS. My voice is up. I'll do two more. One is PDD for Mila, and the other one is for Tom. And I'm going to sign off. Let's go back to TrendSpider really quick. It's an ADR, okay? I'm liking it already. Well, we have a problem here, actually. All right, so I'll go to why. I'll tell you why I like it originally. On the monthly chart. We appeared as though we were getting ready to break out. But then on the weekly chart, you take a look at it here. We had broken out back in October, rallied, then broke back down again. The question then becomes, is this a dead cat bounce? We don't know. But we must hold this support level at 37.05. Now, when does it become a long? On a close above 40 bucks per share. Daily chart. On a daily basis, very short-term basis, we have a breakout. We may inch up higher here. But again, for a longer term swing trade, a position trade, you want to see it close above $40 per share. Short-term swing trade, buy it on a continuation move higher tomorrow, but use a tight stop. Right down below, there's lower band of support here at around, it'll be at around $38 per share. So keep your, it's a low risk, possibly high reward trade if we close above $40 per share. Let's go to a 4-hour chart. Yeah, we'll probably continue to bid up here. We had a nice consolidation, a breakout, consolidating. We'll probably get a continuation move higher. But again, for that longer term position trade, you want to see it close above $40 per share. Short-term swing trade, fine. That noise has been driving me nuts all day long. For shorter-term swing trade, buy it on a rally up and through 38.74. And what's that last one? CERS, Tom? CERS. CERS. That's not coming up. All right, there we go. So this is a recovery play. Interesting. Let's take our crayon out. Positive divergence on ultimate oscillator. All right, let's do this. We have a lot of history at the support level. Where do we close? 428. You don't have a ton of upside here on a monthly basis for a big rally. I do like the monthly charts for the consolidation. Nice consolidation. This is a 2 standard deviation Bollinger Band. We're probably going to pop here, but we're going to hit resistance at $5 a share. Like I said, Ultimate Oscillator has broken out. These stocks still have some maturing to do. Weekly chart. Okay. You're welcome, RL. Are you using the heat map on TrendSpider? Weekly chart's looking interesting. You have a weekly breakout. There would be your stop point. Here's where you begin to see resistance. And that is a monthly breakout at $5 a share. Breakout on RSI. You probably want to see a pullback and a retest of that breakout point, Tom. Volume's light for the week, but this you can't really count this week. That's pretty. They have a breakout on Stokes. MACD very, very mature. Very, very mature. Breakout here. So obviously the path of least resistance remains to the downside. You do have a breakout. So this is a speculative potential short covering rally. Daily chart. All right, so you hit some resistance today. Reversal day today. A pullback to 410 would be interesting. That would be a good support level. And totally achievable. I couldn't buy it right now though, especially after today's price action. You'd have to get above 440 per share. Ideally, Tom, you get back down to 410, and that's a good risk-reward entry point, because if you break it, you're probably going to pull all the way back down to a 3 handle. That would be my play here. I think this is one where I'd have to love the fundamentals to get involved with it, because technically I don't love it, but if you like it for fundamental reasons, then okay, you're starting to see a good technical setup. Thanks, Tom. Happy New Year to you too, pal. And God bless everybody this year. It's going to be a good year. I can feel it in my bones. All right, everybody. With that, I want to say goodnight to you all. If I could ask you to please, if you haven't already done so, hit that like button. And I hope everybody had a great Christmas, great Hanukkah, and looking forward to a great 2020. If you want to get notified of when I go live 15 minutes in advance, use the link below. There's a 15-minute alert link. It'll be an email list. All you do is enter your first name, email address. You will not be spammed, okay? You'll get an alert 15 minutes prior to me going live. And smash that like button, according to Mila. Smash that like button. Thank you, Mila. Everybody have a great night, and I will talk to you soon. Be well.